Good morning, traders. This is a live trade video. The market is about to open in about 3.5 minutes here, and I've got 3 stocks on my watch list. They are directly from Weeble's top gainers pre-market list. Click on all. Then I always organize them by volume because volume is the most important criteria for a stock. And then I look for the float size. So I'm looking for stocks with less than 80 million shares float, and then that kind of has a compounding effect on the volume. The volume is that much stronger when there's a low float attached to it, basically. So this one's a slightly over 80 million, but right around that area, and this is definitely below. Then I like to check the daily chart to make sure that the stock is trading currently. So not just this is the daily chart. It doesn't show you the pre-market or aftermarket. So you have to look at kind of both at the same time. And you see the 200 MA is down at $2.30. So it's definitely trading above that. And EXPR, the 200 MA is $1.28. So there's a gap here around $1.50 that it looks like it's closing, or it's already closed, I'm sorry. And it went all the way up to this resistance here at $1.83. So it has to break that resistance for me to be interested in trading. I mean, that's something I do anyway. Once the stock establishes a pre-market high, I don't take a trade unless it breaks through that and then pulls back. Then we have Ogen, or OGEN, and it's also trading above the 200 MA. Established a high of 107 in the pre-market. It did establish a high of 115 a few days ago on January 7th, 7 days ago. So it might close that gap and then pull back down. I'm not sure. But if it breaks the 107, then I'll look for a trade on a pullback from that area. It looks like it might break it even in these last few minutes. But I'm almost certain it'll sell off at the open, but we'll see. We never know. It might shoot up to that 115 and then sell off. So that's it. We're less than a minute now to the open. If like for example OGEN makes a new high before the open, I'll move this line of resistance up. There it goes. Went up and quickly pulled back. So basically these extreme resistances act like a signal for me to look for an entry when they're broken. That's it. As simple as that. If that level is broken, then I look for an entry, which is some sort of pullback or consolidation. And I'm only taking 2R trades. If you've been watching my previous videos, you know that that's been my goal for a while now, and I'm not always very good at sticking to it. And it's getting to the point where it's getting frustrating, and you know, I know why I'm doing it, because sometimes I'm afraid that the trade isn't going to work out or something like that. And almost always, whenever that happens, when I'm afraid and I start scaling out, it inevitably goes to 2R. And it's the ones that don't go to 2R that I patiently hold to minus 1R, which I should be doing anyway. I need to move this up to 110. So this is going to be a very big range candle if this thing breaks out through 110 at this point. So what I would look for an entry here, okay, no, this is not going to work out for right now. I'm just trying to get that right at 110. A little bit compulsive. Notice, see, so all of these were the top 3 stocks on the top gainers list organized by volume, making them the strongest stocks to be trading. And this is exactly why you don't just jump into the strongest stock on the list and hope for the best, because they often just sell off at the open. So I don't really care what this thing does down here. It has to break through this level before I'm interested in it. What I was thinking might happen at the open was this thing was pushing up pretty hard, and it could have pushed through, and then I would have wanted to see like a 3-bar place setup where I take a trade based off of the second bar. But right now, if you include this candle, it looks more like a weak 3 or 4 bar reverse, a reverse 3 or 4 bar play, but kind of a weak one because these candles are pushed up pretty hard. I mean, these 2 candles here are signs of price strength, even though this one is a red candle, because the stock was pushed up more than it was pushed down. But you never know what's going to happen there. See, and that's why I don't take trades on stuff like that. So I like to see kind of longer term candlestick patterns, because you see how you could be tricked in. I mean, not to say, I guess some people might take a trade there based off of those 2 candles saying that, you know, the price is getting pushed up and now here's a good opportunity to buy the dip. But you're going to be along for quite a ride, because now, you know, this thing dropped quite a bit, and depending on where you got in, you know, you have to get back up to your entry and then, you know, wait for profit. Okay, on the laptop, I have my top gainers list open, but set to 1 day. And then I organize that by volume. I'm just going to restart Webull on that machine real quick here. All right, so same exact 3 stocks when I organize them by volume. OGEN is number 1 by volume, followed by EXPR, and then DPW. So we're watching the right stocks. Now we just have to wait for the right setup. OGEN has every chance of breaking through this pre-market high the way it's looking right now. But any plays down here would be a reversal play, which they do work out sometimes, but not enough for me to get in the habit of taking them. So I kind of use this extreme resistance of the pre-market high as a confirmation of the trend of the stock. And nothing is 100%. This thing could break through the pre-market high exactly like I want it to, give me a nice pullback. I get in and it fails. It can happen, and that's why we have stop losses. But it's just more likely to work out when those things happen. And it's also why we don't enter into any trade with, you know, a huge portion of our account, because even those good setups fail. Nothing's changed on the 1 day top gainer. I can show you right now because it looks like we got time. And we can, it's also a good idea to make sure that the lists match. So I'm going to switch to 1 day. Organized by volume. Same top 3 stocks. And here's exactly why. Again, not to say that it never works out, because sometimes it does, but this is why I don't like these reversal entries, because here was a fake breakout right here after this really large green engulfing candle. Well, almost engulfing. To be engulfing, it really needs to be equal to the size of this candle, but these two together are engulfing this candle here. So one entry for the reversal would have been for the break of this candle, so 104, but then you would need to this stock would need to move twice this distance in price. So from 104 down to, see, your stop would be 96, that's 8 cents. So it would have to go up 16 cents. So it'd have to go up all the way to $1.20, which is way up here. And it didn't even get back to the pre-market high and sold off. So that would be, and then, you know, your stop's way down here. You're going to be in for a very long ride. And then remember, it's got to get all the way to $1.20 for this to be a solid 2R trade. And this thing may hit $1.20 before the day's over, but it's going to be a while. All right, so I see some stocks moving on the 1 day list, but they look like they're out of my price range, like CCIV, and it's too high of a float size anyway. So we have OGEN. DPW is now number 4 on the volume, but it's basically tied for third. They're both trading right around 23 million shares, and the number 2 stock is around 24 million shares, 25 maybe. So they could kind of flip-flop at any time. OGEN is still number 1 with 37 million shares trading. But even being the number 1 volume stock, it's having trouble getting through its pre-market high here. All week, the low float market has seemed pretty weak. It's very unlikely that either of these stocks make it back through their pre-market high, but they're just on the list because they're still top volume. OGEN looks like the only one with any chance. It's really trading kind of sideways at this point. I mean, I guess you could kind of define a wedge pattern here, which is a form of consolidation, and it's basically traders are just kind of waiting to see what happens. I bet the volume is dwindling off. It's hard to tell here, but if we slide this over to get rid of that first large candle, let's see. Yeah, there we go. Yeah, so the volume is fading away. So at some point it's going to come back pretty soon here, and the stock is going to go one way or the other. I would say most likely up toward the pre-market high because of the fact that it ran up in the pre-market, but it could sell off. And that's why I don't take trades until it does break through the pre-market high. So if nothing else, a video like this shows you that patience is key when you're trading the market open, which is something I used to not have at all when I first started trading. Always been a very patient person, but trading is like a whole nother thing, you know, and makes you do all kinds of weird things and messes with your psychology. So whatever other traits you may have in life might go out the window when you start trading. I think what it is that trading kind of requires a whole new level of patience. There's not a big margin of error in day trading, and so there's kind of like no exceptions. Here's a beautiful 3-bar play that I missed, but it's not really within my plan to take it because this thing is still below the pre-market high. And you're trading against the trend. You know, again, this thing may work out. Actually, you know, based on the definition of a 2R trade and a 3-bar play, it looks like it worked out as long as you had a limit order or you're using your hotkeys to get out, because now it looks like it's going to sell off. But it was a tiny trade. It wasn't even really worth being in because 2R is only 2 cents. So if you got in at 140 and you sold out at 142, which was, believe it or not, near the high. I mean, this was a tiny move. You know, when you just isolate the candlesticks, it looks like a decent trade, but in reality, it wasn't much of a trade at all. So I think I would have had, let's just say around 35 shares or something like that. So it might have been a 60 or 70 cent trade. You know, it's not really worthwhile. But again, not a trade I can take. I was just pointing it out because it was a 3-bar setup. But you know, there's a bunch of things going wrong with it. It's against the trend, and nowhere near the pre-market high. So it's kind of weak. I mean, against the trend on a 3-bar play isn't the worst thing ever. You know, especially if it overall, I guess overall the trend is down, and that's what I mean. You know, but let's say that this thing broke through the pre-market highs, pulled back. So now, you know, that pullback is a downtrend, but the overall trend is up. Then you see a 3-bar play. That's a really strong setup. Or a sideways consolidation, even better for a 3-bar play. The pullback, I'd rather, you know, play it like the ABCD pattern and just buy the first candle to make a new high. That keeps your risk down. But if you had a consolidation pattern, then a 3-bar play, that's a good play for sure. So I think I'm going to give this till about 10 o'clock, because after that, you're just sitting here for a long time, and it feels like a waste of time, and then you're more likely to take weaker setups. So if this thing doesn't break out and pull back before 10 o'clock, I'm going to shut down. There's nothing else to look at. I've got the 1-day screener up, organized by volume, and these are still at top 4. CCIV is in the second position right now, but that's too high of a float size. And it's too expensive. I wouldn't be able to buy many shares, so it's not moving that much either. It's only up 6. And that's a reflection of the float size. So here's OGEN coming up near the pre-market highs. It might hit the high of pre-market and bounce off, or it looks like it kind of might be doing that now. Not sure. I just need to see some sort of breakthrough and then a pullback, and then I can take a trade. But sometimes the first one or even two trades fail after that, because there's often choppiness around the pre-market high. You never know. Sometimes you get one candle that breaks through, pull back on one candle, and then the thing just skyrockets. So you kind of just have to start taking the trades once these things break through the pre-market high and give you the first pullback. It should pull back right away because you see this is an extended move now. So as soon as it breaks through, there should be a nice sell-off. Okay, there's the breakthrough just by 1 cent. There we go. Nice. That's what I want to see. I'd rather see it break through kind of strong and then pull back. Okay, I got to get in there. And my stop loss is 107. 107 to 113 is 6 cents. So I need to see 12 cents above 113. So 125. I'll adjust my stop in just a second. Just want to get this order out there, just in case things start to happen quickly. Now I'm going to double check my math. So 113, oh, I forgot to pull up my 2R calculator. $125, right on the money. Now I'm not that confident in this trade here because it didn't really give me a very strong pullback. So I might get stopped out on this first trade, but like I said, you just have to start taking them. And this is the the power of the 2R trading, is that if this trade fails, I should be able to make it back on the second trade. Here's a better pullback over here. I could get lucky and it not come all the way down to my stop, but that's not too likely. Probably going to get stopped out on this one, and then I take the next entry, and that one is more likely to continue on. But you just never know. Sometimes you just get one quick, like a micro pullback, and these things take off, and you miss the entry. So that's why I just start taking them as soon as I get the first pullback, and then the breakthrough, the 1 minute candle. The high of pre-market should act as support if this thing's really strong, and we'll see if it does. So everything now is set. I don't have to do anything. I just have to wait and let this thing play out. This is good practice for holding to 2R and stopping out at 1R as well, because it's not, this pattern here is not quite ideal. But it's, my entry was within my plan and my strategy, so now I just have to trade my plan and trade my strategy, and whatever comes from that. If I stop out at 1R, it's a good result. If I sell profit at 2R, it's a good result, green or red. So that was the more legit pullback right there. So there's going to be a lot of people taking a 2R trade here, which is only a 4-cent gain above that 113. So at 117 is going to be the next level of resistance. So it might be kind of hard for this thing to work out based on my entry. I want to see what happens here at 117. But I just have to stick to my guns because that's been my downfall, is whenever I take an entry, I don't do what I say I'm supposed to do, which is hold till 2R or stop out at 1R. I start scaling out and doing all kinds of stupid things. And it always ends up costing me money in the end. If you do that, you know, trade after trade, you're going to end up red. Whereas if you do this trade after trade, even if this one gets stopped out, I'll end up green. But this here was really the ideal entry for a solid 2R trade. It just wouldn't have been a very big one. It would have been about 4 cents times 36 shares. I guess about 5 cents maybe. $1.80. I mean, that's not bad. It's not a bad trade. This is looking pretty good though. So now we're only 5 cents away from our target. I'm happy with, let me just sell all those shares at that target. If this trade works out, I'm just going to stop for the day because this is like a home run trade basically. It's what at least for me, you know, if I get one good 2R trade a session, then I'm done. And by good 2R trade, I mean, you know, this is like a considerable risk. This is actually more than 10%, I believe. Or no, I'm sorry, more than 5%. The 2R is more than 10%. So the 1R is just over 5%. Got to hold through all this stuff. This is the hardest part about trading, especially when you're new. But we got to get used to this. I mean, this pattern still looks very good, looks very strong. Higher lows, higher highs. Buyers are still coming in, pushing this price up. But even if, I mean, the sad truth is that if you want to be a good trader and profitable long term, you have to be willing to take stops take losses when let's say it just went to 124 and then stops you out afterwards and you never got filled. There, I'm at 125. Come on. All right, I'm gonna pull down there. Oh, it won't let me. It's keeping me from weak handing it. I guess, oh, because the price was right around. Man, that's gonna be annoying if this thing stops me out now. But it's still looking strong. I should just hold fast here. This is exactly what I, was talking about. Sometimes you get stopped out by 1 cent, or on the cent, I guess in this case. Let's see. All I need is one. If it goes to 126, I'm guaranteed to be filled. Come on, guys. Almost there. Let's see if it won't let me pull it down. All right, I'm gonna get out here if I can. Okay, I got filled. Perfect. Excellent. Excellent. So that's exactly, I was just about to close those orders out and just hit my sell all button because it was bouncing right around 125 very strongly. So I guess I wasn't the only one that took that entry because you can see there was a resistance there at 126 and this thing turned around at that point. So so that's a good thing. I mean, that's what you want to be doing. You want to be trading where everyone else is. You want to be going along for the ride with other long position traders. Long meaning you're planning on the price going up, not that you're holding the stock for a long time. So that's exactly the trade that I want to be taking all the time, whether it works out or not. And that's probably, honestly, the first time, and you saw I got a little scared there at the end, but still have to be proud of myself for sticking to my guns there, because it wasn't always so obvious. So this thing could continue higher. I don't know. I'm happy with that trade, and I think I'm going to call it a day. Let's see where we're at. OGEN, $4.34. That's excellent. Brought the count back up quite a bit on that one trade. I didn't take any trades earlier today, so that's my sole trade for the day. That's basically a 10% more than 10% return, because that was 36 shares, I believe, at what was it, 112 or something? Just take a look really quick there. Oh, 113. $40.68. So that's an over 10% gain. So if I do 434 divided by that number, 10.66% gain. It's one of my highest returns, I'm sure. And I essentially grew the account by 0.82% on one trade, so almost 1% on one trade. And that's wonderful. So I think I should take my wins and run, because the slow float market still seems pretty weak. And that was a nice, great, strong trade. I made my profit target by 1 cent. That was a close one. But even if it bounced off of my target and hit my 1 hour stop, that's the way I'm supposed to be trading, because I know I have data in the long run that tells me that's what's going to work. Right now, before this trade, I was up about $6 and change. Now I'm up a little over $10 again. And I would have been up over $30-something if I would be holding to 2R and stopping out at 1R on every trade that fails. So it's very clear that this is the way to go if I want to be profitable in the long term. This was a textbook trade. This is exactly how I want to be trading. And it's a good thing that it worked out, because I definitely needed that little boost, because things have been a little tricky lately. So anyway, I hope you guys enjoyed this video. It took a while to get to the trade, but I will put a timestamp on where the trade is in the comment section. And let me know if you have any questions about this trade, why I took it, or anything like that. And I will see you in the next video. I'm not going to be trading in the aftermarket, because I can't really follow one of my number one rules, which is to only trade low floats that are also in the top 3 volume. There's no way to tell where the volume is in the aftermarket, because at least on the Webull screener, I don't know about other screeners, but when you organize the aftermarket list by volume, you're seeing the volume from the day and from the pre-market, not from the aftermarket. So you have no idea what the real volume is. So that presents a risk, so I'm just going to stay away from the aftermarket. I never really made much money. I was basically break even trading in the aftermarket anyway. So so here's the next setup. It could go to 2R. It's tempting to take it, but I'm not going to do it. So, but that would be like a legitimate trade. The only thing that is going against it is that the pullback was pretty strong. The pullback was definitely well beyond 50%. 50% is about right here. So the fact that it didn't, and look, there's a fake breakout right there. The fact that it went below the 50% is a sign of weakness, and that this thing could sell off. So this could be the end of the move right there. So I'm happy with that trade, and I am going to close up shop for the day. I got plenty of other things to do, and now I can get on with them. All right, guys. I hope you're trading well, following your trading plan. Even if you're getting stopped out by 1 cent, you got to do it. It's the best way to trade in the long run. All right, guys. Take care. See you in the next video.